In his time as CEO and CFO of listed and private companies, Mr. Purdy has developed significant shareholder value through managing and optimising operations, delivering large projects and executing on business improvements and asset sales. Mr. Purdy has extensive market experience and proven track record of delivering company funding requirements. Please join me in welcoming Ian to the stage.
Thanks, Jeremy, and thanks everyone for your attendance this afternoon. When I was here this time last year, we were very excited to announce that we'd given the green light to our FID and we'd committed to the restart project at our uranium mine in Namibia, the Heinrich mine. At the time, we were fully funded for the project. We'd just started the project works and we had secured one tender award with a leading US utility. 12 months later, I'm pleased to bring you an update and to take you through the outstanding success we've had over the last 12 months and to get you up to speed on how we're progressing with our journey back to full commercial production. So firstly, as I mentioned, we're returning the Heinrich mine to production. Just to remind you, this is a low-risk brownfields restart. The operation ran commercially for 10 years prior to be putting into care and maintenance back in 2018 when the uranium prices were incredibly low. So despite the operation being commercially successful and actually being cash flow positive at the mine gate, the decision was made to protect the metal in the ground and put the mine into care and maintenance, as a lot of other major mines around the globe were also put into care and maintenance at the same time. It's about a $120 million US project. We're fully funded, and I'm very, very pleased today to give you the update that we remain on track and on budget. We're approximately 65% physical completion, and we remain on track for first production, which is targeted late in the first quarter of next calendar year. As I mentioned, we'd secured an offtake with a leading US utility. Since that time, we've had incredible success on the marketing side. We've worked incredibly hard and we've secured a contract book that is the envy of the market. As well, the uranium market keeps going from strength to strength, and I'll take you through some detail, but we couldn't be more pleased with where we sit today, how the uranium market is moving, but also the advantage we've taken within that market. We've maintained our strength in a balance sheet. We've been very disciplined and will remain very disciplined right through to first cash flows and first commercial production. We've got over $126 million US in the bank today, and our project is fully funded. We also mentioned last time I was standing here our long-term growth optionality. We've got a very large global exploration portfolio, as well as some fantastic upsides at Heinrich itself. Pleased to mention we've undertaken some modest works at our Michelin project in Labrador, where we've commenced planning for a drilling program, as well as some development study work that we're undertaking. Let's talk about nuclear demand. We're seeing strong demand for nuclear energy across the globe, and this is being driven by the need and the desire on global decarbonisation. A couple of facts you may not be aware of. Firstly, it is the second largest source of global clean energy today and has virtually zero carbon footprint. It's nearly half of the US's clean energy, and what we've seen in recent times is, particularly in the US where there's been bipartisan support for nuclear for a while now, that's actually translated into regulatory support. So the Inflation Reduction Act provides tax credits for clean nuclear energy on a par with other clean energy sources. That is a game changer for the US utilities, and certainly we've seen the US utilities much more active in the long-term market since that act was put into legislation. We're also seeing a lot of support in the EU, with nuclear being recognised as green in the EU taxonomy legislation. And China is unbelievable. The Chinese demand for uranium to support their build-out of nuclear is phenomenal at the moment. So we're seeing strong demands in all areas of the globe. Let's talk about supply. There is a structural supply shortage. This is not unexpected after a commodity downturn that ran for the best part of the last decade. We've seen the supply side of uranium disrupted. I've mentioned major mines going into care and maintenance, lack of development, lack of new approvals, no exploration and no development pipe work for most of the last decade. What we're seeing now is, with the market turning again, the demand going from strength to strength, the question is, where is that supply coming? This graph shows the structural supply. It includes all of the existing supply across the globe, as well as the secondary supplies, as well as the restarts, which includes our Langer Heinrich mine. And you can see there's a predicted supply deficit of some 40 million pounds per annum out to the end of the decade. So what that says is there's an incredible opportunity for incumbent producers like us, and also there must be some price signalling to bring new projects into the mix over the next 5 to 10 years. Uranium inventory levels are rapidly reducing. This is a critical part of the market, and certainly the inventory overhang has held back the uranium market for much of the last decade. What you can see from this graph, which is done by UxC, a leading uranium analyst, the sustained inventory drawdowns, which a lot of utilities lived off last decade, are no longer viable. The drawdowns is the light green part of that area graph, but you can see all forms of secondary supply are rapidly reducing and expected to be at normalised levels by 2024. We're also seeing the end of underfeeding of the Western facilities, where they're now moving to overfeeding due to demand and enrichment. And in October 22, UxC actually called the end of the era of inventory overhang. So just to recap, very strong demand and growing demand across the globe, structural supply deficit, and the inventory overhang is over. What does that mean? It means uranium contract has returned to fundamentals. The graph on the right demonstrates that incredibly clearly. This is the term contracting that's happening around the globe, and this is independently, again, compiled by UxC. And you can see the final column way over on the right-hand side, that is year-to-date term contracting. Last year we saw a really strong kick-up in term contracting levels. This year looks like it's going to be potentially a record year, and we're seeing that across the globe. So what's happened? Term contracting has returned to the uranium market, and it's being driven by those mid-term supply-demand fundamentals. The increased term market activity coincides with vastly reduced short-term carry trades on the spot market. So not only have we seen the term market come back healthy, the spot market's looking a lot healthier as well, with much less volatility and much stronger pricing as well. The major mine restarts, including Cameco's MacArthur mine and our mine, have been soaked up in the term market over the last 12 months. And we've seen strong price responses in both the term market, which is up over 65%, and the spot market, which is up over 76% in 2 years. This means that we have a healthy uranium market, which is stable, less volatile, and showing signs of strength as we move forward. Against the backdrop of that uranium market, we're incredibly fortunate that Paladin is a preferred counterparty. What does that actually mean? So global utilities are seeking, firstly, term contracts. 82% of all uranium purchases are done via term contracts. Utilities are looking for reliable counterparties. They're looking for counterparties who they have confidence that they will be delivering the production when the contracts are due. They're also looking for diversification of supply. This aspect only came into the market last year when the Ukraine situation arose, where the utilities, for the first time in a long time, were worried about geopolitical risks and supply chain risks and started looking for new supply. And Namibia, where we are, is one of the first places they came to. They're looking for companies with strong ESG performance and credentials, which is essential given their role in the ESG space. They're looking for a proven product that they know will get through the converters, that will feed their facilities. And most importantly, they're looking for near-term production. The utilities have gaps in their books. It was in 2024 last year, and now they're looking for contracts for 25 and beyond. So independent, reliable producers will continue to take advantage of this strengthening uranium market. Let's talk about the exceptional contract book we've put together. So we have managed over the last 12 months to rebuild a global contract book, and we've focused on the absolute best of the best customers. We've secured contracts with the largest players in the US, we've secured a contract with one of the largest players in Europe, and we've also got a contract with the largest player in China. So we are in all the markets we want to be. We are diversified, and the credit worthiness and the quality of our counterparties is best in market. Give you an example, our US counterparties, the 4 of them, their market capitalisation is over $200 billion US. And we have a life of mine offtake with CNNC, the largest consumer of uranium in the world and the #1 nuclear producer in China. We have 6 offtakes for approximately 18 million pounds, which is circa 50% of our production out to 2030. That is exactly what we were targeting pre-production, and we're very comfortable with that level of contracting. We're fully contracted for calendar year 24 and heavily contracted for 25. The way we look at the future, we'll continue to layer in contracts, capturing value from the increasing price levels. It's very early in the cycle. We're going to remain overweight to market-related pricing, and we'll continue to leverage our Namibian origin material. Let's talk about the project. We're in Namibia, which is a uranium mining jurisdiction. We're in the Erongo region on the west coast. There are 2 very large operating uranium mines, the Rossing and the Husab mine. Rossing has been operating there since the 1950s, probably, when it first was put together, and they're still operating today. So we're in a uranium mining jurisdiction. We've got 10 years of production history. We produced over 43 million pounds of yellow cake over those 10 years, and based on our reserves, we'll produce another 76 million pounds over the next 18 years. Excellent local infrastructure. It's set up for the export of uranium. There's a deep water port, all the roads, all the licensing. It's a uranium-friendly jurisdiction, and we've got really strong support. I just want to take you on a quick tour of our operation. This is coming through the front gate as you hit the plant, and down the middle there you can see the mine haul roads. So we're now flying in. You can note the amount of scaffolding and buses. We have over 1,000 people on our mine site refitting the plant at the moment. We're now coming up to the process centre where our new drying and packaging plant's being put in, and we're moving down towards the ROM pad now where our crushers are over on the right. You can see the mining workshop over on the left, and then in the background, the hill on the right. That's our stockpiled material. We already have all of our mine material for the first 15 months of operation sitting on that stockpile. Over to the left, you can see the tailings dam, TSF5, that's ready to go when we restart operations. And then right down the middle, down the back, that is where the mining operations will recommence in the middle of financial year 2020, calendar year 24. So we'll be mining for financial year 25. Project's going well. We're 65% complete. You'll note there we've just completed 1 million man-hours on the project, and pleased to say no serious injury. We've only had one medical injury the whole million hours. Productivity is outstanding, quality's outstanding, and it's a very skilled workforce. The project's going very well. We'll be moving to commissioning later this year, and we're looking to feed ore into the crusher in January, early January, ahead of first commercial production late in Q1. We're also gearing up for operations. We're expecting about 300 staff at our operation when we're up and running again. Pleased to report that we've secured or made offers to 95 of those staff. We've started with the senior team, and we're bringing in the senior managers and the supervisory team ahead of bringing in the operators ahead of commissioning. So the recruitment's gone exceptionally well, very strong, skilled local mining workforce, and a lot of good employees who used to work for us have chosen to come back and work for us again. We're getting ready for our ROM feed operations. We're going to be feeding the stockpiles for the first 15 months. We're close to appointing a contractor, and the big yellow equipment should be arriving in November ahead of earth-moving activities in December. Long lead items are coming in, consumables are coming in, and everything's set ahead of operations early next year. Just quickly on the Michelin project, this is in Labrador in Canada. It's a great jurisdiction, strategically very important. Interestingly, Canada's labelled uranium a critical mineral and is providing infrastructure support for that, and obviously very well located for the US utilities. And we've got a big ore body there. It's advanced exploration, a lot of work's been done, there's a lot of historic drilling. We've also got an exemption where we can operate this 100%. We do not need a Canadian partner. And we've done a lot of field work and looked at all the historic data and the work that's been completed to date. So our focus right now is to update the prior concept study. We're looking at development pathways. We've got a modest drilling program. We've only drilled 15% of the leases. We think there's lots of opportunity there. We're targeting near surface extensions, and we're doing the groundwork to map out the development pathway, so this time next year, when Langer Heinrich's up and running, we're ready to go on Michelin with our preferred pathway forward. In conclusion, we are on a clear pathway to becoming a significant, globally independent uranium producer. When I stand here next year, I'll be providing guidance for financial year 2025, which will be full commercial guidance. We expect to be in full commercial production by the time I'm here next year. We are laser focused on executing at Langer Heinrich. That is a massive catalyst for us. It's a huge event for the local community and for Namibia. We are bringing Namibian uranium back to the Western markets for the first time in many, many years. We then will define our development and exploration pathways, not only at Michelin, we'll move our Australian assets forward as well, but most importantly, we see massive opportunity at Langer Heinrich to grow it beyond the base case which we're delivering next year. And then longer term, we'll maintain our commitment to shareholder returns. We'll look to establish capital management frameworks which drive sustainable value to shareholders. That's what we're here for, whether it's via capital returns or organic growth or M&A activity. Thank you very much.